Are we live? I think we are.
I don't know.
Right, just let's get rid of that. There we go. So we'll just wait and see if we are live. Yep, guys, if you could just post in the comments box that you can hear us. Just let us know you're here. You can hear us. I can see there's plenty of people coming in. Just give us a yes, thumbs up, just to know that you can hear us all right. I can hear Ceri. Ceri can hear me. I just want to make sure you can hear us. Here we go. Hi, Matt. Here's Lorraine.
Hi. This will be fun. What are you saying?
What are you saying? Love it.
Hi, Eugen, Dominic, Craig, Russian.
Good. Oh, so we've got people coming in from YouTube as well. That's good. We've got people coming in from all over. Love it. You can see in here. Thanks, Philip. Great stuff. Henry, how are you, sir? That's been a while. Are you doing well? Good. Okay, we'll get started. First of all, we're back. Second one. So not just me this time. You get to hear from Ceri, our superstar day trader and TSC trainer. Ceri's been with us since 2012. She started learning with us. The great thing about hearing what Ceri's got to say is that she's been through the system as well as helps people on that. So she's been teaching in our DAX trading room for probably about 6-7 years now. And she spends time on a normal year, will spend half her time, 2/3 of her time out in Gozo, sunny Gozo, and then the rest of the time in the UK. But you've been there since how long now?
It's a year now.
Nearly a year. Yeah. There's worse places to be, though.
Yeah, I'm not complaining. It's 23 degrees here today.
Yeah, exactly. So we're going to go on a format where I'm going to shoot a load of questions I want to ask you, and also questions that people have sent in. And then right at the end, guys, we will open it up to the floor. So it will come down and you'll get a chance to ask questions as well. All right. So Let's get started.
Okie doke.
Cool. So first of all, Ceri, most important question. Okay. Most important question. What was your main motivation to get into trading? What was it that made you go, do you know what? I'm going to learn to trade.
Okay, so that's an easy one. Thanks for that. Start with an easy. So I had a manufacturing company, and I sold that. I always said that I wanted to retire by 50. So I sold it when I was 49 years and 6 months or something. But the money that I got for that was never going to be enough. So I needed to make the money work for me. And because I wanted to maintain my current lifestyle, and that money was not going to be enough. So I always knew that although I was retiring, I wasn't really. I was just taking a completely self-employed direction, if you like.
Yeah.
Just stand and fall by my own efforts, as I like to do.
Cool. So in terms of trading, though, what was it? That was the thing that got you, to look at something else. But what was it about trading that you went, I quite like the idea of this?
Okay, so it was, I saw an advert for a trader support event, like an introduction day that you did. Well, it wasn't a day, it was just a couple of hours. And I thought, well, I didn't know anything about it. I think it's well known that I didn't even know you could trade from home. I knew like nothing. But I did think, or maybe it's like I had a job years and years ago, and I really liked that job, and it was buying and selling computer chips. And I thought, oh, I wonder if it's like that. I had no idea.
Got you.
So I thought, oh, right, okay. So I went along, and that's, how I met Traders Support Club.
Got you.
I can even remember the guy's name who held the event, a guy called Nick.
Oh, yes. Yeah. So you had Nick for 2 hours and then put up with me for 3 days. So
yes.
If that wasn't good. That's great. That's great. So I think what's important there is that key that you weren't avidly into trading before you physically first did it. You hadn't read loads of books. You hadn't done anything.
Oh God, no. No, I can't. No, I'm not. You know, I'm not a book reader, Ali.
No, I know.
I'm not a book reader, but I never knock anyone who does read books, so long as they're not given conflicting advice as such. Because if Bob tells you to do A, B, C, and then Tom says no, you need to do X, Y, Z, and Dick says no, you've got to do 1, 2, 3, then who do you believe? And you end up being more confused than you were before you started reading books. That's just my personal opinion, and I know I'm probably one of the very, very few people who agree with it.
Well, we were talking about this in the trading room last night. Is that I think sometimes what happens is, yes, you've got to have a knowledge base to trade. It's a knowledge based skill, but it's also a performance based skill. So yes. The risk is if you spend too much time on the knowledge side, you miss out on the performance. You can't read your way to a solid trading mindset. You have to balance it with the doing. Yeah. There's really only one way, and that is to actually do it. You can read all the books and think, right, yeah, I know what I'm doing. I'm all prepared. But until you have your first drawdown, you don't know what's coming. Yeah, it's very true. Very true.
Very true.
Wise words. Yeah. So next question, which leads on to, I think this leads on in a little bit of a way, but I think this is quite an important question. What things do you wish, if you could run the clock back, what things do you wish you'd spent less time focusing on at the start, and what things would you have spent more time with the benefit of hindsight? What would you have said, right, I'm going to do less of that, and I was actually going to do more of that?
That's okay. So less time. I'm just thinking back to when I started. Right, okay. I know that a big thing for me at the time when I first started learning was I would talk to my friends about it, and I very quickly learnt that I should not talk to my friends, non-trader friends, about it, because I always say, you know, your friends, they have all the best intentions, but when you become pregnant, and they're all midwives. When you're going through a divorce, they switch from a midwife to a lawyer. Currently, they're all doctors because of the pandemic. Obviously. They've all become doctors now. And when I said that I was learning to trade, you don't want to do that. Oh, you don't want to do that. And I say, well, have you done it? No, but everyone knows it's a scam. And I wish I'd learned earlier to just don't even talk to my friends about it, which I don't now. I have like my trading circle, and then I have like a social circle, and people, some of them are intertwined like yourself, but I do tend to try and keep them separate, because the hardest thing is that your non-trader friends, they don't understand how you can make money when prices are falling. They just don't understand it, and it's like, no, you're going to lose all your money. So I wish I'd spent less time trying to explain to my friends.
Yeah, I can, and it's that, and any that do get shorting think that you're one step, you know, you're basically the devil, because you're ruining the market, and you're driving value share prices down, all this rubbish. So I learned a long time ago that you can't. There's just no point. And a friend of mine said, "There's no point trying to push a rope. You might as well put it." And what's interesting?
That's a good one. I like that. Yeah.
Yeah. There you go. Another analogy. Yeah. But I've noticed that even once you're doing well, the cynical ones just, well, you're only one trade away from ruin, or you're only one, because they don't understand risk management. So
they don't understand anything about it.
No, that's a really good point.
It's best not to talk to them about it. Surround yourself by people who trade, and talk to them about your trading, not non-traders.
And sometimes it can be the people that care about you the most, because
for sure.
Yeah,
absolutely. My family. I mean, what are you doing that for, Ceri? Look at me now, fam.
Doing what you like, traveling wherever you want. But one of the things that's really interesting is, as well, on that, is if you say to most people, I'm going to set up a business, they're like, great, go on, great stuff. But you say I'm going to learn to trade. They're like, oh, well, 80% of traders lose money. It's a scam. Well, 80% of businesses fail in the first 5 years. And of the 20% left, 80% of them
80% fail. Yeah, for sure.
They're all for you to start a business. But when it comes to trading,
it's because it is perceived as gambling. Exactly. That's why. Which I understand their point of view, but I just don't agree with it. I mean, it is gambling, but with a proven edge.
Yes.
So, you know.
Yeah.
But
that's why I say I don't tell anyone I use a spread betting account. I say I use an ETX account. As soon as you mention the word betting,
betting. I know, it's like betting. Oof. What? Yeah. What? Like at the casino? No.
Good. So that's a really, really good point. I'm really glad you brought that up. So what would you have done more of? So what you would have done less of? Because that's great, because obviously there's time, energy, and stress, you know, telling people and then them impacting you. And that can impact your trading. You know, you have a couple of minutes and there's somebody kind of looking over the shop over your shoulder.
Yes, well, I told you so. So just don't tell them.
So what would you have done more of, do you think?
More of? Okay, so, well, it was easier for me because I signed up. So I had a clear, defined process that you showed me. So I didn't really, I didn't understand initially the value of data initially.
Okay.
So I wish, not that I'd done more of it, because I did do it, but I didn't understand the value of doing it as much as I do now, obviously. So
if that's not done a 180, then I don't know. I mean,
well, I know. I know. Talk about a huge 180. Yeah. So I did it, but I was like, yeah, all right, I'll do it because I've been told to do it. I didn't, see the value until a light bulb moment. So,
so to summarize up, you'd say you wish you maybe hadn't gone through the motions of data because you knew it was part of the plan. You'd invested more time into it.
Yes.
Good.
Yeah.
Good. Love it. All right, we've got some more questions. So next one. Bring them on. What is your current trading methodology? So there was quite a long question, but I've summarized it down. So overall, I would say, rather than the specific strategies, we'll come to that in a bit, but what would you say was your overall methodology?
Methodology, do you mean like I'm a day trader and I trade?
Yeah, what's the overall framework?
See, you and your fancy words.
Well, I'm copying what the question was.
Okay, so I'm a day trader and I just trade DAX on the 5-minute chart 90% of the time. And then I trade with the trend and against the trend. I've looked, but I've yet to find a good strategy for consolidations, but I'm working on it.
Okay, got you. Well, it's like me, I don't trade consolidations, but yeah. Okay, so at any point have you thought about swing trading? Have you thought about that as part of
Yes, no, I did. When I signed up, we were doing swing trading, in the lessons, weren't we? Back in the day. But I very quickly realized that swing trading was not going to hold my attention. It wasn't going to be as buzzy as I wanted it to be. But as soon as I switched down to a 5-minute, it's a whole new ball game, which is what I like. I like the fast pace. Got to keep on top of everything. You have less time, so you have to be more clear and quicker reacting, placing your bets and working things out and what have you than on a daily time frame.
Got you. So would you want to trade going forward? Would you want to trade more? We were speaking just before we started, and you mentioned that you want to get back to more time in front of your screens, more what we call manual trading. So is that
manual trading? Yeah,
that's obviously an objective for the next couple of years. Is it just to do a bit more manual?
Yeah. Well, I used to do a lot of manual trading, and then obviously with TSC that takes time away from my screens because I can't really do the both at the same time. And then obviously with me living in Gozo for half the year, I didn't want to be stuck in front of the screen. So I did go down the mechanical route, and that's fine. But I really do. I missed the manual, the physical, looking at the chart, right? Price analysis, clicking the buy and sell, and this, that, and the other. So I always knew that 2021, I was going to get back into. I was going to find the time to get back into my manual trading, because it was like I'd grab an hour here or a couple of hours there, and it's not the same. You've got to have a good run, a good few hours, and so that was always my 2021 goal, and I've achieved that so far. I've done quite a bit of manual trading this week, so
good. How's the week going? How you doing?
Oh, I'm doing quite well, thank you very much.
They all want to know now. They all want to know.
I know. Okay, well, I'm working on a new strategy, and it's to do with Heikinashi, which I have heard and researched a lot. And so I've come up with some strategy criteria, and I am just manually trading now on a 5-minute chart. But I only started live trading it this week. So I've only had a week, but I've just been stopped out of another trade for a 3-to-1. That'll be. I think that will bring my live trading this week to plus 15, plus 16.
Good.
So, but at 0.5%, so 8%. So yeah.
Okay, so plus 15 risk to reward around that area, so about 8% a week. Yeah, we've both had worse weeks than that, haven't we? So,
we have.
But it's important that 1 week doesn't make a trader. So
absolutely.
Absolutely.
1 month doesn't make a trader.
Make a trader. One of the things I'm going to jump in here, because when we were over in Gozo with you the last time we were over, I think that week you had 3 or 4, it might have even been 4 days on the bounce, and you weren't in front of your screens as much because we were out, supporting and having loads of fun. But I think you'd had 4 days on the bounce where you'd had 4 losing days. Yet for the guys listening, and I think this is really important, I had no idea, because you just let the trades run. I mean, we talk trading. As I said to you earlier, normally at 5 o'clock on a Friday, if me and you are together,
we're having a beer.
But what was interesting is throughout the week, guys, you didn't see Ceri's mindset. You didn't see her mood. You didn't see anything shift because of the result of the trades that day. And I think from my point of view, I think that's as a trainer, and obviously Ceri, you training people, but I think as a take home, guys, if you let the result, really the best traders don't talk about the result on a daily basis. They don't say whether they've had 2 winners that day or 3 winners that day. The idea is you notice I had to probe you a little bit, because your result there is not what you want to be transfixed on, because if you start getting too entwined in it,
just 1 week.
Yeah, it's just 1 week. And I think that's where sometimes day traders can go wrong, is that because they're trading over a short time frame, they fractionalize the amount of time that they look at their results. Whereas my view is you can be day trading or swing trading. Your outlook needs to be long term regardless.
Yes, absolutely. It really is. And as I say to the new guys in the room, we've got a wave of new guys now, and the most difficult part of our job, in my opinion, is getting people to accept that they have to have those losers. Yeah. And that out of 100 trades, they're going to have 60 losers and 40 winners, more or less. And how those cards fall is out of our control. So it could be that you have 20 losers on the trot. That's a bit of an exaggeration, but you get my point.
Yeah.
But you need to get to that point where you can think, great, okay, another loser, brilliant, because the more losers I get out of the way now, what follows a losing run is always a winning run, always a winning run. It has to come back to your win-loss ratio. But it's still that everybody understands it in theory, but when they're physically going through a drawdown, it's really hard to get them to accept. It's nothing to worry about. It's just just the losers.
Just what it is.
It's cost of business.
But what's really interesting is what you'll often see is who here has heard of the term wrong side of the market? So who here has heard of the term being on the wrong side of the market? Has anyone heard that? Give me a yes if you've heard that. Like you've heard a trader say, "I always feels like I'm on the wrong side of the market," or I'm always losing, or this strategy doesn't work. And that's one that I've heard so often. So I'll be at the expo. Yeah, we're at the Forex Expo, and people say, "Oh, this strategy doesn't work." And I'm like, "Well, how long you traded it for? 3 weeks." Well, one, how do you know whether it works? But what you often see is people will come along and they don't understand the fact that those 40 losers or even 60 losers out of 100, they don't come loss, win, loss, win, win, loss, loss. Sometimes you'll get a batch of losers in one go. And then what the person does is doesn't think the way that you've just described, which is the more losers I have now, the bigger the winning run's going to be. They stop trading the strategy. Then starts winning, they come back to it and go, shit, I've just missed a winning run, jump back into the strategy, and then what they have is they have 2 losing runs and then moan that the strategy is a load of shit when actually they haven't actually traded it out. So what Ceri's saying there, guys, is so important about the fact that she said it earlier, you're not really a trader until you've had your first drawdown. But we are so in tuned to negatively have a negative association to the fact that trades lose. It's just part of the process. So that's great. I really think that's a good thing for people to take home. So now this is a question that came in. I watched Ceri's interview with Etienne. So yes, one of the top ones that anyone's ever had. That was right.
Shut up.
Yeah, I got like 20 views on my podcast. You got 40,000 or something. So it's good.
Guys.
So this was interesting. It was evident that you have a strong belief in back testing, which we touched on. Well, we'll talk about that in a second. But where do you get your data from? So is it Tick Story? I've never heard of them. I didn't even bother Googling them. So I've never heard of Tick Story. But tell the guys sort of where you get your data from, how you approach your back testing. And I think they'd probably get more from that than knowing, what data service you use.
Okay, so I get all of my data from Pro Real Time.
Cool.
I just set the number of units to 200,000. You can go, depending on the version of Pro Real Time, you can have up to 1 million. But I don't need that much data because I can go back. I checked today, actually, and I can go back, I think it was 20 months on a 5-minute chart, which is more than enough for back testing. And I think you can get about 4 months on a 1-minute chart. So that's all I use, Pro Real Time. I don't do all of this downloading of tick data for MT4 or anything like that. Because I don't trade off MT4. Well, I do the robots, but not proper trading, manual trading. And so I don't want to really, because my minimum stake, I don't need to. My minimum stake is way above the 10 pence a point. Yeah. And I like the bells and whistles that you get with Pro Real Time. So I don't bother with Dukascopy and whatever, because I wouldn't know how to do it anyway. So
that's cool. So would you say it's more important to find a charting software, whether it's Pro Real Time, TradingView, that you feel comfortable to use?
Absolutely. Because the easier your charting software is to use, the more you're going to use it.
Yeah.
If you're looking to backtest and you're backtesting on, let's say, ETX.
Yeah, that's right. I don't rate their charts. Yeah.
No. You're going to struggle to do your backtesting because it's not user friendly. It's not, it hasn't got the utilities that you want. Like, I use the fib expansions for my one-to-one ratios and this and the other. You can't do that on many of the softwares. TradingView, I don't know, and I can't comment because I haven't looked at it, but I do hear good reports on it. So maybe that's one that I will look at, as and when. But I'm happy with Pro Real Time because I find it very easy to use. and it's got everything on it. I think their alert system is fantastic.
Yeah.
So, and I use alerts a lot.
Yeah.
So,
yeah.
So
good. All right. So pro real time. Yeah.
Yeah.
And trade and use it and the trade through. But ultimately, I think from my point of view is some form of paid charting software, because you just get more data. So ultimately,
you get what you pay for. It's
exactly.
the same old thing. You get what you pay for.
And I sound like a bit of an old man when I say this, but I can remember when I was paying nearly 400 quid a month for e-signal when I started out.
I remember you were on e-signal.
Yeah, because it was worth it. You look at it and go, £400 a month. This was back, just post dial-up, but it made a difference. It made a difference to have a piece of software where you had infinite amount of data, that you knew the pricing was at least an aggregate of 5 or 6 different data feeds, and there was no lag even when the internet was as bad as it was back then. So it's little things like that. In the end of the day, pro real time through IG, 30 quid a month. That's the best
30 quid a month you'll spend in trading.
Totally agree. Yeah, or trading view at whatever, $40 a month. Yeah. If you're trying to scrape by with the charts that the basic charts that IG supply you, or the basic charts at ETX, and there's a mindset shift that needs to go on. I think you've got to be willing to put a bit of skin in the game to get the right.
Exactly, and you need to look at it as well as like it's a cost of business.
Yeah.
That 30 quid a month is a cost of your business, because trading is a business. It's not a hobby.
Yeah.
It shouldn't be treated as a hobby anyway.
Exactly.
There's a difference.
Good advice. So let's go to the next one. So what exactly does Ceri have on her charts? So we're staying on the subject of charts. How many indicators and what are they? People love it. What's the secret indicator that you use? What's the secret source?
2 indicators: moving average 5 exponential and moving average 15 exponential. And I also currently have the 200 MA on, because I'm working on a 200 MA strategy, but that's it. I don't have, well, I say that, but of course the new Heikinashi is using RSI and ATR, but as well. But as a rule, I'd say 90% of the strategies that I trade, I'm only concerned about the 5 and 15.
Got you. And would you say, but what's interesting, what I picked up there is, yes, you've got another strategy that's using completely different indicators or tools or studies, as they're called, but there was only 2. So even though they're 2 completely different, there's only 2 involved in any scenario. So it's the same with us, same with the swing traders. We've got 3 or 4 moving averages, and then possibly MACD for divergence. So one of the things you've got to be wary of, guys, is too many indicators. Some people's chart barely see the candles, you barely see the price action because they've layered up.
I know. It's like spaghetti junction. It's like a London Underground map sometimes.
Yeah, and that's that whole that kind of you've got your analytical mindset, which is right. I'm going to use this, and I'm going to use this, and I'm going to use this. And the false assumption is, because I've got 10 indicators, I'm being more safe. Well, the challenge is you wait for 10 indicators to line up to place one trade, and random distribution says that one trade's the loser. And if you'd only used 2 indicators, you'd be 8% up on your batch of trades. So sometimes it's a false assumption that more indicators means less risk. Yeah,
absolutely. But your back testing will tell you that.
Exactly.
Whether it helps or hinders, as I call it. Yeah.
So and I think that's an important point, because it's almost a TSC philosophy, which is, I would rather have 50,000 lines of data about a strategy than 20 indicators. I'd rather know where I'm at with my data. Yeah. So I almost see data as an indicator in itself. It's like a batch. It's like an indicator.
Yeah. If it's good data, as in reliable data.
Yeah. Which Matt will come to that in a little bit, because Matt's asked a question about data. So don't worry, I'll come back to that in a little bit. All right. Or actually, we'll do all the questions that people have sent in, and we'll come back to that in a bit. So we'll stay with the questions that have come in. So we've got another one here. We've done that one. So this one, Great question. Is 10 to 20% a month achievable for a day trader? Now, I'm going to wade in on this one as well, but I'll let you go first.
Okay. Yes, absolutely it is. But that's not a straightforward question to answer, because it all depends on your risk management. It all depends on your comfort zones. If you're happy with having more than one trade open at a time, depends on your trade frequency. It depends on many, many different things. But yes, absolutely, it is easy to get 10 to 20% a month.
Good. What would you say a trader, what three things would a trader need to have, maybe internally, in terms of how they think, and what would they need data-wise? Because we have a rule on the swing trading side that if somebody wants 5% a month, their data has to show them something different. Funnily enough, I was interested to see if someone's looking to make 20% a month, and we'll talk about averages and consistency in a second. What would their data have to show for them to hit that kind of level?
Well, for me, it would need to show 30% a month. If your back testing says 30% a month, I think in reality you'd be more than safe looking at 20% a month.
So would you say a mistake that traders make is they've got a number on paper and then they try and meet the same number?
Yes.
In reality.
Yeah. So that for me is why I trade more than one strategy at a time, because when I back tested way back in the day, the pullbacks and the other strategies I trade, they were all much of a muchness around 12% a month, roughly. They were all very similar. But of course, in reality, it was like 8% a month. But that's why I started trading up to 3 or 4 strategies at any one time, because then I'm getting my 3 times 8 is 24, and so on and so forth. But the downside to that, and there is a downside, is that, and we covered this in the room actually this week, I can't remember who it was. Someone said they'd had 24 losing trades in a row. And that's the downside of trading 3 strategies, because all 3 strategies hit their losing run at the same time.
Yeah.
So again, you have to be pre-prepared for that, and you have to pre-plan for that.
Totally.
So yeah.
It was literally only last week we had a room session, and somebody in the room, I won't name names, turned around and said, well, the good thing about me trading 3 strategies is if one's losing, the other will offset it. And I'm like, well, you just made a complete false assumption. Yes, you might be in a situation where 2 strategies are losing and 1 offsets, but what if all 3 are losing at the same time? You have to, that's so important, guys, what Ceri was saying there. You have to be able to look and say, well, I've got 1 strategy that makes 10%, 2 that makes, and that second that makes 10. So if I trade both of them, I'll make 20. The question you should be asking is, if I trade both strategies, what's my worst case scenario?
Worst case scenario, absolutely. Yeah, absolutely. Because I still say to the guys, I remember ringing Ali from Gozo one time saying like, oh my God, help me. Because do you remember I was trading indices, a Forex and a commodity, thinking, well, I'm being a bit canny here because they're all different areas and they'll never hit a drawdown at the same time. But it does happen. And it sent me into a real bad tailspin, didn't it?
Well, and we got you out when part and parcel of the game. And I think that's where accountability is.
And it was a massive lesson learned. And I always say the best traders are the ones that learn those big drawdowns or experience them early on, because they're the ones who are stronger moving forward.
As a trainer, if we had a scenario last January off the back of the live kickstart we had 5 people come into the trading room. They were all nearly 15% up within 6 weeks. I'm more nervous when a trader is up 15% in 6 weeks, because they're either going to get the risk is they'll get cocky, or they're going to experience a drawdown at some time. So you're better off getting through it. and having the accountability
Yeah.
there. And back to what you said about those correlations, a lot of people will make false correlations about, oh, well, yeah, I'm being canny here because these markets are not related, so they'll offset. Yet they've got no data to back that up. They're using fundamental stuff that they've seen on, I don't know, Forex Factory, and gone, well, when interest rates go up, the pound goes down, or some correlation to justify, rather than look at their worst case scenario. I think that's sometimes why we get less bums on seats as a training company, because we will tell people the worst case scenario of what they're going to do. Because I'd rather they have the worst case scenario, like you said there. Exactly.
Yeah, absolutely. But I mean, that is the downside. But then the upside is that they can all start winning at the same time. So your drawdown might be a bit hard to take, but your winning streak is that much stronger, and ultimately you're back in the black. So it's you just have to be pre-prepared for your worst case scenario, which is why, as you know, risk management's all about risk management, working that out correctly.
Yeah. So you and that's where the whole, so is 10 to 20% achievable? So in a scenario like that, if you were to strip that back for what I do with swing trading, is 5% achievable? Yes. But that doesn't necessarily mean every month you're going to hit 10%. You're going to have months where you're losing. You're going to have weeks where you're losing. So what better question to ask, and it sounds like I'm picking the question, but it's important, is 10% average per month achievable, or is 20% average? Because then what that gives you as the trader is a bit more scope, and you're not necessarily trying to trade. When I used to day trade, one of the mistakes I made was I would try and trade to hit the magic number at the end of the month, and invariably those last couple of days I'd end up giving money back by taking stupid trades just so I could hit the 10% mark or hit the 5%, whatever it was.
You just need to, it is a totally different mindset, as you know, from swing trading over to day trading, totally different. So and you have to recalculate everything from your risk, everything. So it's like a new ball game.
Totally. Good tips. So great. I like this question. From Cameron, what part of trading do you enjoy the most? So what is it, if you look at trade, what is it you love the most? I think I know the answer to this, but I'm going to see what you say.
Oh, really?
Yeah.
How well do you know me, Ali?
I know. There you go.
So the bit I enjoy the most, okay. I like finding new strategies and back testing them. I find it fascinating because although I've got good strategies and I know they make money and it's proven they make money and blah, blah, blah.
Yeah.
What I'm finding is my mindset is shifting. The older I get, I'm getting like, I want a smoother equity curve. I'd rather earn less money and have a smoother road than earn loads of money but have big potholes that I've got to drive through. So that's where I'm at with my mindset. And so I like trying to find the new strategies. I actually love doing the kickstarts. I love doing that because it's our chance to hopefully persuade people to do the work and that they can do it without just watching YouTube or whatever. It's our chance. That's how I look at it. We get that one chance for 4 weeks to try and get them to think, I don't need to copy or buy a strategy or whatever, because there's no point buying strategies, but so I do like the kickstart. I just like all of it, really.
Do you know what? That was going to be my response. I was going to say, she's just going to say all of it.
I do, really.
Just like trading all of it. Yeah.
I'll be honest, I just love it. I do love it.
It's an interesting point you brought up about the kind of creativity, because some traders will pick a strategy and literally that's it for the next 20 years. And some traders are more creative. They like testing new things, experimenting, and sometimes that testing And I will encourage traders to do that, because sometimes having a strategy to test and play with and experiment with means they're more likely to stick to the one that they're trading. Because a big thing I see in trading is chopping and changing strategies too often. But if they're naturally creative and they've got a natural tendency to want to explore, I'm like, well, test that over here, but just keep doing what you're doing over here until you've got enough data to be able to run it. So it's interesting. You say everything. And I like that what you say about the kickstart, because for me, the kickstart it's that point where we go on someone. That stop going around YouTube. We're not saying our way is the only way to do this, but the problem you've got is you're trying 20 different ways. So it's like, for me, I see kickstart as a way of saying stop. Or if somebody's new and they're like, where am I going to start? Well, just start with this, because otherwise you've got the chance of going down. You used the phrase, too many rabbit holes. You just go down.
Yeah,
okay.
Exactly.
Love that. Good. I can see people are firing questions in. We will come.
I know. I've got no chance of reading all that unless I lean forward.
Don't worry. I've got it covered. Don't worry. So, where are we? This one, interesting one here. So from Jose, I feel like I'm not progressing. What can I do if I keep giving back profits I seem to make? There's a lot of assumptions in there.
Okay. So, Jose, well, obviously I don't know what your strategy is that you trade, etc. So I don't know the details of it, but I'm going to assume that you have back tested it. So if you haven't back tested it, then you need to back test it, because you need to find out from your back testing what your worst run is, and your win-loss ratio and the trade frequency, and your average risk to reward. And only once you have those benchmarks will you then be able to look at your live trading results and compare, because it could be that your strategy is never going to make money, It might not be a profitable strategy, and you don't know that until you've done the back testing. It could be that you have happened to start trading your idea and it's hit a winning run, and then you're hitting your drawdown run, which is greater than your winning run, and therefore it's never going to make money over time.
Exactly.
Okay, so it could be that you're missing trades, so therefore your trade frequency is not up to what your back testing said it should be. Or it could be the other extreme and you could be over trading it. But the only thing, look at it as like you've got to find evidence. Everything trading is evidence in my book, and you're looking for as much evidence to support who you think done it, who murdered it was the butler or whatever. But gather all your evidence and analyze your evidence, and then hopefully you'll be able to see, A, it's my strategy, it doesn't work over time. B, I'm breaking my rules because my strategy does work over time, so therefore you must be breaking your rules. How am I breaking my rules? Or C, I'm over risking because you've not done your risk calculations correctly. There are many things, but the first thing you need to establish, Jose, is whether it is actually a profitable strategy.
Brilliant. And I love it. You said about risk to reward and trade frequency. Essentially, the question you've got to ask, is it the strategy, or is it you, or is it a combination of the two? It's basically what you've got to establish. And what Ceri said there was so important, is that you could be in a situation that you're giving back profits on a strategy that you shouldn't even be trading anyway. Or it could be that the strategy is having natural drawdown periods, but because you don't like losing, you're over leveraging. So actually the strategy is going to give back some of its profit, but because you don't like losing or you over leverage, you give back all of it. So a lot of people aren't able to ever make that correlation. What's the strategy's equity curve and its drawdown periods versus your drawdown periods? Because all it could be is that you're not managing risk, like you said. So really, really good example. Really good answer. Next one. Do you believe in using trading robots? No. I know, and I know Nigel, and I know why he asked that. So there you go. But anyway.
Okay. So for me, I do believe that there is room in trading for robots. I do believe that. However, I do highly believe that everybody should learn to trade before they use robots.
Brilliant.
And everybody should understand the strategy that if they buy a robot off the internet, and we've all done it, I've done it, they should understand what that strategy is. And unfortunately, you're never given the details when you buy one off the internet. So for me, I would never buy one off the internet because if it sounds too good to be true, usually is.
Yeah.
Or what they're not telling you is that they're risking, 5% a trade or whatever, over risking. So for me, it's better to create a strategy, your own strategy, and then turn that into a robot, because that way you will stick with the robot a lot longer. The trouble with robots, there's good sides and bad sides, but the trouble with I'm a very, very discretionary trader, as you know.
Yeah, but you've earned the right. I always say you've earned the right.
Oh, absolutely, yeah, yeah, for sure. But until someone learns how to code discretion, a robot is never going to make more money than I am. That's it, really. It's true, because
you sound
it's
like
a robot.
A friend of mine says exactly the same thing. And the other thing, from a newbie's point of view, what Ceri's saying about buying a robot off the internet is a lot of what you'll see these days is that they'll pop up a MyFX book account which can be manipulated. So seeing a MyFX book result doesn't necessarily mean a lot. But the trouble is you might see this strategy and it's made 50% in 6 months. But what most people don't do is look at the drawdown. As you said, they don't look at the risk that each trade was to do that. And invariably what these people are doing is they're doing it on a very small account. So they might be doing it on a $2,000 account at a broker. And then they pile their email out to 100,000 people, 10,000 people buy the robot. And then 10,000 people are putting their order in with that broker with variable broker size accounts. The strategy won't work anymore because the same order's going into a small broker. And the reason it's a small broker is because the people selling the strategy have done a deal with the broker and they're splitting the spread and the stake. So when somebody's selling a robot, they're not just selling the robot and the $500 that they get for it. They'll be in cahoots with the recommended broker and they'll be taking of all of that. So it always ends in tears, I find.
Basically,
ends in tears.
A rule of thumb is if you have to sign up with a particular broker in order for that robot to work, don't touch it.
Yeah.
That's a good rule of thumb. If you have to open an account with a particular broker, walk away because it won't work. Love it.
Great advice. Right. That was all the questions that came in, but I can see comments coming in. So we are going to, let's go back. I'm going to have to scroll back here. So I think we'll go with Matt's first. So this is quite an interesting one. When I started to learn a strategy, it's hard to tell if your data's accurate because my skill at that strategy could be lower at the start. So the idea that your skill is lower at the start. Do you ever throw out early data when your skill might be low, or do you keep it?
That is a really good question. And you're the first one to ever ask me that.
I don't remember seeing that.
No, that's a really good one. Okay, so Mike, do you want me to answer this or you?
Yes, yeah.
Okay. So for me, I think the very fact that you're aware that your data might not be correct is brilliant. So for me, I think when you're back testing a strategy, it's a new strategy. I think if you start off, say, in January 2020 or what have you, I always say to the guys, I want at least 6 months, preferably 12. Okay.
Got you, yeah.
Now, the reason why I say preferably 12 is because I know that January and February probably not going to be there's probably going to be mistakes, etc., etc. And as they're back testing January and February, they're automatically thinking, oh, actually, yeah, if I add that into the criteria, that will make that one a winner and that one. And their starting criteria is not the ending criteria. Does that make sense?
Yeah, I've seen that they almost, without realizing it,
shifts criteria. Yeah. I do it myself. I do it obviously, because it's only once you start that you think, oh yeah, right, okay, yeah, oh yeah, that works, and you tweak as you go. It's kind of like a running optimization as you're going, but at some point you reach that set of criteria, and then you think, right, this is the one, but you could be up to May by then.
Yeah.
Do you see what I mean? So yeah, initially
back work to do. Yeah.
Yeah. So I can't remember the original question. Flash it up again. Do you ever throw out? I never throw any data out at all. I always keep my data. But I do accept that the first couple of months I don't really rely on as such. Yeah. It's like when you're working out your win-loss ratios and this, that, and the other, if you work backwards rather than from day dot forwards, I would say.
I think that what you brought up was really interesting. Is sometimes people want, if they're testing one of your strategies or our strategies through TSC, then there's this two assumptions come out that whatever we've tested is the absolute best. Well, that assumes that we've tested every variable possible, but we haven't. We've just got something that's worked and we've optimized it. So there's often that assumption, and this idea that your strategy molds. Most of the strategies that we trade in the swing room, and I'm sure it's the same with you, are not exactly the same as they were 5 years ago, or even 6 years ago. So there is an element of backpedaling. And as soon as you say that to people, well, you've got to backpedal and go back over your old data. Well, I don't want to do that. Well, do you want 20%, 10% a month or not? So sometimes you have to go forward, optimize your strategy, and then go back a little bit.
Yeah, if you're going to, if you completely change. It's like originally the pullback that I started trading years ago was a 21 pullback and an 8 pullback. But it's only when we discovered that it's the 5 and 15 suit the 5-minute time frame. But that meant that we had to start again with our back testing on the 15. Yeah. Just because it works on the 21 and the 8 doesn't mean that it's going to be exactly the same criteria. And it's not exactly the same criteria. So we've made it even easier now.
There you go. Yeah. So I think absolutely spot on with what you said. Some really key observations there. My answer to that, Matt, is I just follow the rule of, if I want to make 50% a year as a swing trader, I need to see 100% on paper. So what I'm assuming is some mistakes. It's like what you do with the collective group, Ceri. You don't assume that never assume your back testing is perfect. Assume mistakes and assume some positive bias, as in chances are you will have missed losers and you'll see more winners than losers. So I just have a simple rule. I don't throw the data out, but I just don't assume that my back tested data is what I'm either going to get or what I need. So if I need 50% a year and my back testing data shows 55, in my mind, I shouldn't be trading that strategy because it's not got enough wiggle room, and I'm not allowing for enough bias and mistakes in there. All right. So great question. Really like that. Dominic, let's see what this is. Long one here. For me as a beginner who doesn't have data, which strategy works best? Should I start with strategies I learned during the kickstart? Well, absolutely. Yeah. So you should start with strategies because there's two things behind them. There's data and there's live data and real data. But what you should be doing is doing some form of, in my mind, Ceri will answer this as well, forward testing and back testing, because it's not just about stuff on a spreadsheet. It's also about pattern recognition.
Yes, I agree. So one of the benefits of back testing is pattern recognition. So you get used to spotting the setup and you get used to going through that checklist. Remember that checklist that we did in Kickstart of each of the strategy criteria? So if it's a pullback, for example, your first one is must have that clear higher high or clear lower low. That's the first thing you check. So do the back testing, tune your eye in, and also demo trade. You can demo trade now because you've got the strategy. So start demo trading now whilst you gather some back testing data.
Great.
And then when you see that your demo trading is in line with your back testing, it's never going to be exact. Don't worry about that. Close enough. That's the time that you can start live trading.
Love it.
And I would suggest, Dominic, if from memory, I don't think you had traded before from memory ever. So for me, start with the one strategy. Start with the pullback strategy that we went through, and get completely comfortable with that before you try and look for like the against the trend strategies or consolidation.
Great piece of advice to everyone. A lot of people go all over the place and try and trade 1,000,001 because they see stuff going on. Start with one, focus on one, and work at it like that. So I think that's really, really, really good. And also, Dominic, with the Beat the Banks program, you've got 20 years of back tested data already, and you've got 4 years of live data. So the other option is, yes, do the work yourself, but also part of what happens when you get into that level is you get access to the data as well. So good. I've got some really interesting questions here. How can I create a trading journal or spreadsheet to find my weak spots?
Ooh. We love a spreado.
We do.
We do. It's quite sad.
Sad, isn't it?
Okay. So I don't know. Is that Dehante?
Dehante, yeah.
Dehante.
Great name.
Yes, looks Spanish. Dehante. So what I suggest is just keep a basic spreadsheet. Obviously, you want the date. If it's a swing trade, if it's a day trade, you'll need the time as well. So you want your date, your time, your entry price, your exit price, and whether it won or lost. And if it won, how much did it win as a risk reward ratio? Okay. Don't worry about, the number of points or whatever. Points are totally pointless in trading, in my opinion. It's your risk reward ratio. So, you've changed the view. You want how much you won or lost. So, for example, if you were trading a pullback, that's way too complex. They're not going to get that.
Yeah, I want to just show them something that's really important. It's yes, a lot of people think about what you just said there, red and green, win and loss, but it's actually not the number of losers, it's the risk to reward. So on our spreadsheet, and this is what's really important for everyone, is what we're focusing on is not how many red and green. Yeah, it's a stat, but what we're looking at is the risk to reward. I might have had 4 losers there. I know I had 4 winners, but the winners were twice the size of the losers. So what Ceri said there is so important, is that it's got to be about risk to reward, not just win loss.
It's never ever about pounds and pence or dollars and cents or euros and cents. That's totally irrelevant in trading backtesting. It's about either the percentage that you won on that trade or the risk to reward that you won on that trade or lost on that trade. And whereas you're saying to find my weak spots, so I'm assuming you mean like breaking your rules or missing trades or being greedy or along that line. So more mindset issues than actual data issues. So then I would suggest adding to the spreadsheet a column that says, call it, did I stick to the rules? Yes or no? And that way, if you stuck to the rules, it's a yes, and so on and so forth. And then at the end of the month or quarter or however often you're going to analyze your data, you just filter out the ones that say, no, I didn't stick to my rules. And hopefully they will be, not a great amount of trades, but it'll start highlight. You can go into even more depth with that by having a drop down list of how did you break your rules. You know, I got in too early, I got in too late. You know, so start monitoring your external factors to do with that trade as well as just the result. Hope that helps.
Yeah, love it. And on our journal, we have these things called critical success factors. So you can set up 6 critical success factors that will help you, and you can monitor them with a simple yes or no. I was coaching one of our students literally this week, and he's had a really, really good year, but he's had a dodgy start to the first couple of months. So he's realizing that it's just getting into his head. So I said, journal, exactly what you said. Just journal down how you're feeling when you've broken your rules, all the things you're doing. And then at the weekend, go back over it with a red pen and just see if there's a similar behavior that keeps coming out. So is it that you start over leveraging when you've had a couple of winners, or do you double up on your risk when you've had a couple of losers? Look and just go back over, just journal everything out, and then go back and red pen it, because what you may find is specific things that you didn't even realize you were doing, but you had to, like Ceri said, create some sort of system that it comes out of here and goes onto paper. Because I think a lot of the time traders sweep shit under the carpet. It's like, well, yeah, we'll worry about that some other time, or we won't do that again. I always say the most dangerous phrase in trading is just this once. The most phrase in trading. I mean, I'll do this just this once. So that's what I would say, Dante, is journal it out. You can just be as simple as just a diary on your desk, a notepad, and just start seeing if there's a pattern to what comes out, because that'll help a lot. Right, here we go.
Can I just say about Richard Taylor? I've just read his comment there. Can you see it, Ali? Richard Taylor, 459.
Yeah.
Right. That's a good. I just want to be clear on this, because you're saying, you know, importance of back testing and then adding discretion. How do you go both together? And you've said, does your discretion mean that you're happy to deviate from the back-tested strategy? The answer to that is no. I never, ever deviate from the back-tested strategy. When I say I add discretion, that will be, I'll have the setup and it ticks all of the boxes for my strategy, but I won't take the trade because I might feel that the market is extended, and therefore I'm not going to carry on going with the trend. I might be a trend line break. So why am I going to take, you know, a pullback long when we've just broken the trend line and we're reversing? So that's what I mean by discretion. But the actual strategies themselves, I never ever deviate from what was back tested.
Yeah.
Hope that makes sense.
I'm really pleased, Richard, you brought that up, and Ceri, because we were discovering, because a lot of new guys in our trading room at the moment, these questions are coming up. So I did a whole training session on this. So my view is, as an experienced coach, and the same with Ceri, is most traders, you end up using discretion. Now, when we say discretion, we don't mean that you use a 15 moving average pullback. On Tuesday, you decided to use fibs for the pullback instead. We're implying that the trader is following the criteria that's been tested, but sooner or later, they don't place the trade because they've had 4 losers and they're feeling fearful, or they double up on risk, or they end up using discretion badly because they're reactive to what's going on. So our philosophy at TSC is, the chances are you're going to use discretion at some point, or it's going to happen anyway. You might as well create a process around it. So I actually, in that training session, used you as an example, Ceri, and said Ceri might not take the 4th pullback at 4:30 or 4 o'clock on a Thursday because she's had 3 winners on the DAX. It's at a daily resistance, and the market has done 200 points out of an average ATR of 150. So she's going to say, the strategy's setting up. I'm not deviating from the strategy criteria, but I'm just not going to trade it because I'm going to use my discretion. Say, I've had 3 winners. It's the end of the day. And this is why data is so important, because if at any point Ceri can compare her discretion relative to the result. And that's why I said she has to earn it. So one of our big things is we get traders, when they come on board, to use very little discretion at the start, because they haven't had the experience of the strategy, and they haven't necessarily got to know that market. So that's why we say you've got to earn the right to use discretion, because it takes the experience.
And also, people's natural instinct is to think that their discretion is better than it actually is.
Yeah.
And so what I get the guys in the room to do is I get them to actually measure their discretion. So they log everything, every setup, strict criteria, every setup, and then they'll say whether they would have taken the trade or not. And if not, why not? So what was the discretion? And we break it down into different areas. And it's quite shocking, I think, for 90% of them to see that actually their discretion it's working against them initially, because you have to, it comes from hours and hours and days and years of experience. And you're not going to pick up discretionary skills within a few months. You've got to build them up slowly. So it's our job, I feel, to tackle one area of discretion at a time, get that nailed, and then add another one on, get that nailed, rather than try and think, oh, well, Ceri said this and this and this, so I'm going to do that. But I might not have said the whole picture or something along that line. So but don't beat yourself up. I think it's great that people try and add discretion, but you have to be aware of whether it's working for you or against you. And the only way you can prove that for sure is to log all the data and compare the results.
Yeah, log all the data and have somebody ask questions that make you accountable to yourself, because a lot of people will just right.
Yeah.
The question from Roshan: if you're trading two opposing strategies, so mean reversion, so something like a reversal in our language, in simple language, a reversal strategy, or a with the trend strategy, can you still hit a losing streak on the same market? Absolutely, you can.
Yeah.
You can be the market can be trending up. You can have a nice trending strategy, but you get clipped out because your stop's a little bit too tight, and then you trade the reversal strategy at the extended area and price breaks through it. So the answer is absolutely yes, and that is a classic example of where this. I'm not saying you've done this, Roshan, but that's the example where somebody will just assume that, well, if I'm trading one market and I'm trading with the trend and against the trend, surely one will cancel out the other. Well, you've got stops, you've got so many different factors. You could end up having a losing run on both,
or a winning run on both.
Yeah. So as long as you're prepared for the best and prepared for the worst, I think that's a really, really important lesson. This is an interesting one. Where are we? Here we go. Does backtesting take into account current market conditions, bull, bear market, low volatility, high volatility?
Right. Okay. So, yes, it does, basically. If you go back far enough, say as a day trader, you go back 12 months, you will have all types of, even especially this last 12 months, you will have all types of market conditions within that time. But that highlights the need for doing enough back testing, going back far enough, because if, for example, you only do a couple of months back testing, then you're not necessarily going to have your bull market, your bear market, low volatility and high volatility in that shorter a time frame. That's why it's important. The bigger set of data sample set you can get, the more realistic it's going to be moving forward. But yeah, absolutely, your back testing will have those market conditions.
Yeah, because what I hear as well is you'll hear a lot of generalizations on the news or CNBC. They'll say, yeah, markets are at low volatility, but they're not looking at the DAX 5-minute chart in comparison to 3 months ago, 4 months ago. They're just looking at a mean or an average that's thrown out. So to me, it comes back to the old saying. It's like, do you factor in the news with back testing? Well, no, because I'd rather have. I didn't know what the news was on that day, on that moment. So for me, if you're lurking on a low enough level, it'll work. Cool. How you doing on time, Ceri? We got time for a couple more.
Yeah, go on.
One more. Right. See if I can find it. We've talked about variables on backtesting. Well, I'm going to come to Noreen's question because I think this is a really good question to finish on.
All right.
So here we go. It's all right. She's not going to say anything. You worry. What's the one thing you must achieve or that haven't so far? So what's a goal you've got in trading that as yet you haven't achieved?
Okay, a goal in trading. Again, I'm going to do that this year. Is I am going to do the FTMO.
Oh, okay. So you're going to go.
I've done the challenge thing or whatever, and I passed that. But again, you see, you've got to you've got to know your data. The rules they've slightly changed since I did that challenge. Because even though I passed that challenge, I knew that actually the strategies that I trade would never pass that challenge over time. Because it was very, very tight on the drawdown. Yeah. So I knew there was no point me continuing it. But I understand that the goalposts have widened a little bit. So now, especially with this new strategy that I'm looking at, I am going to do the FTMO.
There you go. Brilliant. Well, we've got day traders and swing traders who've done it. So
I know. Yeah. And that makes me think, blimey, if they're doing it, come on, I need to, get my game together.
I think the big thing with FTMO is you have to trade without the objective of hitting FTMO. So if you're new to the game, you've got to carve out your strategy and your plan and execute that without this fixation on. Because the trouble is with FTMO, it's a little bit like the old day trading fixation of hitting 10% a month or paying your rent at the end of the month. You have to take a long-term view, and then you can optimize your strategy to fit their parameters. But if you're purely trading to try and hit the FTMO criteria, again, it will probably end up. It probably will end up.
Tears.
Yeah. Good.
Yeah. It'll end up in tears. I think that the FTMO is not so much about your strategy, it's about your risk management of said strategy for that. Yeah.
Totally agree. Good. And then just to finish, one tip you can give to everybody listening. So guys, give us a like, give us a love, give us a bit of or share if you want. And then Ceri, one tip if you could give the guys, one thing that they could work on.
Okay. I'm not going to say back testing because I it's boring. I've gone on so long about back testing. So for me, what I do, and it really helped me in my early days, was when I created a strategy or what have you, or any strategy, I called them my swatch cards, and they went everywhere. I did them about a credit card size, just a small. And I laminated them up. It's very professional. And it's very professional. And they had the bullet point criteria of the strategy. And at the end, so for example, with the pullback, number one, must have clear higher high. That's, the number, and then you list them. Mm-hmm. But if you put yes or no at the end of it, it becomes a question and therefore a checklist.
Love it.
And then you have your little swatch cards while you're looking, you're thinking, right, oh yeah, I'm looking at a pullback, get my pullback swatch card. Right, what do I need? Clear higher high? Have I got a clear higher high? No, right, move on to the next market. And it acted as a checklist, and it sped up the whole market scanning and this, that, and the other. When you're looking at 30 or 40 markets, it's worth time consuming. Yeah. So anything that speeds that up. But the most important thing is it acts as a checklist.
Love it. Good.
Hey?
Brilliant. Love it. Guys, can you give Ceri a big thank you? I appreciate that. Andrew, I think we covered your question on FTMO. I touched on that. But yeah, we talked about pushing the trades. You've got to manage your risk.
Yeah, you don't. Yeah, it's all about the risk for that.
I hope that was useful. Any of you who are on the Beat the Banks or trading oil, you need to get your trailing stop up to 6%, 3-1, because we've had a little bit of a run there. All right, so we've had a little bit of a run. So if any of you guys are on the Beat the Banks, you need to get that. Yeah, it's doing all right. It's getting there. So, guys, please give Ceri a thank you. Ceri, thank you for giving up your, well, you're an hour ahead, so giving up your Friday evening. So I really appreciate you coming in. Thanks for all.
You think this was water?
I've been to Ghost when I know what you guys have. Guys, thank you for turning up. I really appreciate it. Ceri, thank you so much. I really appreciate your time.
No worries. Ciao for
Bye.
now.
Take care, everyone.
How do I get out of here now?